Hi, welcome back to my channel here, guys. So today's video, we'll be talking about our cash book and about the bank. So why is it so? What's the differences? Any particular issue over here? Yes, definitely. Now, so welcome to the banking world. So the banking world is totally a different world compared to businesses that sells products. So the products that's being sold in the bank are financial products. It's all very, how to say, it's all abstract. Because the things that they are selling is much more on services and all about money, all digital transactions. That's why there's something called the financial technologies nowadays, aka the fintech. So there's a lot to do in the banking world system nowadays. So one of the common issue that we will face as normal businesses is that our cash book bank balance at the end of the day, okay, let's say this is the month of January, it will not be the same as the bank statement for January, which is over here. You see, at the end of the day, on January 31st, for let's say 2025, we're supposed to have 1,500 ringgit dollars in our bank. But during February, we received a bank statement for January. We saw here 2,000. So there's a differences, 500 differences between the bank balance and the bank statement balance. Why? What makes our bank balance in our cash book different than our bank statement? So why or what's the difference? What is the difference? What are the reasons why causing all these differences? Okay, first of all, human error. Error where? Error in the cash book. Okay, the bank area, yeah. Okay, the cash book's bank account, there's some mistake. Or the bank statement has a mistake. That's one of it. Secondly, there will be some automatic transactions being done without us knowing. Not to say we do not know that there will be automatic transactions. It's just that we don't really get ourselves alert on it. For example, in our cash book, we will receive or pay money out of check. So once we receive check or once we pay something by check or by online transfer, we will straight away record them in our bank account, in our cash book. Okay, so this is our cash book, yeah? Don't forget. But there will be some things that will plus or minus from our bank account in our current account at times in which we do not know. What are those? For example, we will have direct debits in which we give permission to third party to directly deduct our bank account. And we also could have standing orders in which we will give an order to the bank to deduct an amount fixed from our current account to give to someone else every month. For example, this could be in the form of rental, insurance, or rates, our electricity bills, because you do not want to every month log into your bank application or the website and make the transactions. Imagine you have tons of transactions to do, the fixed payment that you have to do every month. Wouldn't it be time consuming and hindering your productivity? So to avoid those nuisance and all the OTP, all the OTP transactions that you need to verify before a transaction can be done, you do not want that. So you ask the bank to do it for you instead. And sometimes there are bank charges. So automatic transactions, okay, maybe we don't put on automatic transactions, but rather we put it under a new heading. Okay, bank charges. Charges for what? If we buy some checkbook, we are out of checkbook. Okay, so businesses who have current account will have a checkbook. Current account is totally different than our normal savings account. Current account is for businesses and they can issue check. If savings accounts like you and I, we have later on, as a normal people who is not entrepreneur, we will have our normal savings accounts. Okay, and that doesn't have checkbook for us. Bank charges for checks book that we buy, any bank loan charges, bank loan or bank overdraft facilities that they charge us some interests. Okay, interest. Okay, bank loan interest, bank loan repayment. Okay, that's some of it. And there will be also transfer from third party to us, such as credit transfer. Meaning, a customer bank into our bank account without us knowing. And that fella never go and, that particular customer never tell us. So we do not know there's a credit transfer received. But most of the time, I'm sure all the customers, they would let us know that hey, I bank into you for the invoice that I want to pay. Yeah, they would let you know. Then it could be also dividend charges, not dividend charges, but it's dividend that we receive. Dividend received from the shares that we buy in a particular company, we get a cut of profit. once the company has come to the year end, all right, they will declare an amount of percentage of dividend for each shareholders that they will give, depending which kind of shares that you are holding, whether it's ordinary shares or a preference shares. Yeah. So these are some of the differences and what will cause the differences between your cash book and your bank statement. And there's another last two more. Unpresented checks. So unpresented checks is like this. You have issued the check to your supplier or anyone, okay, normally supplier, or it could be to somebody for rental that you pay to the landlord. But this particular person have not yet presented to the bank this particular check. They haven't bring it to the bank yet to ask the bank to deduct from our bank account. Not yet. Because why? Maybe the supplier is busy. Okay? That's one thing. They haven't presented to the bank to say to the banker, hey, I want you to take out an amount from this person's account, a number of money, to put into his bank account. He haven't bring it there yet. Or we will have also checks not yet deposit. Okay, let's call this undeposit. Checks not yet deposit lah. Sometimes they call it uncredited lodgements or uncredited checks. So meaning you already put the check that you receive from your customers into the bank, but the bank had yet to add to your bank account. Not yet. They haven't added into your bank account yet because why? There is a term called the clearing process, the check clearance. Meaning the bank will communicate between banks to see whether the person that has the check, the person who issued the check, has enough money in its funds. Meaning, let's say you receive a check from customer. You are Maybank, but your customer's bank is a public bank. So banks and banks will be communicating with each other and asking whether, hey, this public bank for this particular check, okay, do that person have enough money? Or is the bank account correct? Is the person's signature is okay? And many more issues. They'll be they'll be communicating. If it's okay, then the check is clear. Finally, the money from the public bank will go into your Maybank. That kind of thing is called the check clearance. So these are the things that causes the differences between our cash book balance and our bank statement balances. So now, notice that I never really mentioned much about the debit and credits of our bank part. And it is a different world out there, so things will be different. How? Okay, number one, we need to know that our debit and credits is a totally two-way thing, and it will be a different understanding between us and the bank. So if let's say it's from our side of point of view, to us, a debit means money come in, correct, in our cash book. And credit will mean money go out, correct? However, for the banking line, okay, where we will receive our monthly bank statement for the previous month, debit will mean minus and credit will mean plus. So once we compare our cash book amount, the T account of our bank column, cash book, bank column, okay, $100 that we receive for, let's say, from Ali, it will appear in the bank statement as on the credit side. If let's say we receive the money from Ali on 1st of January, and let's say 1st of January, we also deposit the check into the bank, we will only get that amount to reflect in our bank statement, let's say on the 3rd of January. It will take a few days. If let's say we make payment to Baba on the 3rd of January to pay for our invoice that we owe last month of 2,000, and then Baba will have to deposit the check into the bank, as in present the check into the bank, into Baba's his own bank, and later the bank and our bank will be communicating. Then later on, let's say on the 5th of January, the check number, let's say this is a check number, C123, you see C123 over here, 2,000. Or Baba. Normally you'll be seeing also like this. Instead of Ali, you see deposit, because you deposit the check into your bank. And then for the 5th of January, you'll be seeing check number C123. This is the one. because this is the check number that you have in your hands that you issue to Baba. So you see it reflected in the bank statement over here with your bank with your check number or any different kind of format. So normally every bank has their own way of telling you what is what. So it's much alike the same. And what to do if our bank statement and the cash book balance is not the same? Okay, we will do it like this. There are few things. Number one, we will update the cash book. We update the cash book, then we perform bank reconciliation. Okay, so we will update the cash book, then we will perform the bank reconciliation statement. A bank reconciliation statement is a statement that shows the differences between the cash book and the bank statement. It shows the reason why it is different. It doesn't mean like we have to find a new value. In fact, this type of question is a free marks question because answers is in front of your face. Is given in the bank statement. Whatever the bank statement figure that shows, you have to arrive to that. That's one of the things that I would say for bank statement if they come up that kind of questions. Okay, it's like in maths or normal maths where we want to prove that the left hand side will equal to the right hand side, that kind of thing. But the real amount that you will record in your SOFP is the one that you have updated your cash book bank figure at the end of the day. The SOFP bank either can be a current asset if let's say it's a positive balance, or if it is a current liability, meaning it's a bank overdraft. The updated figure for the bank balance, that will be the one that you record in the SOFP of the bank for that particular month. Okay, so how we update the cash book? Okay, so we will have a cash book open, banks column, and then we have to update it. This is how normally what we will see. Okay, here's just a rough idea, yeah. Later on when we do the exercises, when I put an example for the exercise later on, or in the class as we have our tuition together, you'll see the real and detailed understanding about this. Okay, so you will have an old cash book. The old cash book, the bank column, whatever that is brought down at the end of the day, the very below ones, that will be your bank balance that you open over here. Let's say it's a January 2025. So you will put it as January 31, whatever kind of a balance brought down over here or around here, whichever it is, okay, either one. So if let's say the bank statement has an amount in which it would relate to your cash book, let's say we can have error. It can be like this, error here in the cash book. When our cash book has been overpaid, so we debit our cash book. If we over receive from our cash in our cash book, we have to credit our cash book. When we debit our cash book means we plus our cash book. When we minus our cash book means we credit our cash book. Meaning to say our bank statement, particular transaction, the amount has been overpaid or you have underpaid or over received or under received, depending on the situation. Your question will let you know. They will say cash book has an error of overpayment or underpayment, over received or under received of an amount. So error can be the human nature part here. As we record things in our cash book, the bank statement is correct, but the cash book amount is wrong. Okay? And say our bank statement, we receive some sort of this dividend from a particular company and some, let's say from Ali, a credit transfer. It appears on the credit side of the bank statement, but it doesn't appear in my debit side of my cash book. So I will debit my cash book. It has to be matched. Your cash book stuff, let's say you put in from, let's say Baba, you receive money from Baba here, 1,000. Then on the bank statement, you should have a deposit of 1,000, which relates to actually Baba. So you have to you have to match. If it is matching, then no issue. Those that they are not matching, meaning whatever is inside the bank statement, but the cash book doesn't have it, you throw to the cash book. If let's say it appears something on the credit side, but for that particular issue, on the debit side of my cash book, doesn't have, so therefore I need to debit my cash book over here. Then the other way around, if let's say I have some sort of fixed expenses which is going through under direct debit or standing orders such as, well, rental, rates, anything, insurance, and then maybe some checkbook, bank charges, interest on loans or bank overdraft, these will appear in the debit side of the bank statement, but you do not know this happening. You never credit in your cash book. So therefore, you throw whatever that is in the bank statement into the credit side of your cash book to deduct the money from your cash book, the bank column. So then later on, you'll be getting a new figure over here. Let's say it's a positive figure. Okay, a balance carry down, and we bring down to here. This will be, well, of course, February 1. Balance brought down. Let's take it as a debit. Okay, let's make this situation a debit balance, a positive bank balance. So the next part is we will do this bank reconciliation statement. Okay, so before that, some pointers. Matching, you okay. If it is not matching, then update the relevant places by circling them. Meaning, if let's say this figure on the credits of the bank statement doesn't have in your cash book, then you have to circle this. Because later on, the things in bank statement, you will place them into the debit side of the cash book. Same goes on the bank statement debit side. Here, you have money deducted from your bank, but you did not deduct in your credit side of your bank account, then you circle them up. Okay, and get attention for all transactions that relates to last month, money that you pay last month. The check number is not within your old unupdated cash book. Let's say there's an old cash book over here. This is normally the old cash book. Your check only starts with C123 and ends at 129. There's a few there. If you see check C122 and below, you do not want to take. And any deposit that you deposited into the bank, which appears on the first few days of the bank on the credit side, let's say there's a deposit amount of 1,000 over here on the 3rd of January, but this 1,000 doesn't appear over here at all on the debit side. So this 1,000 is definitely an old transactions as well. Because what you're going to write in your cash book, you're going to write an update there with the word deposit, which is weird. So no, you're not going to write that. So that would be a old transaction. Normally the things that you update into the cash book will be normally special names like this. I call this special names. Because in your bank statement, you always will see what some sort of a deposit and check number, deposit and check number. So if you see some funny names appearing, normally this is from the bank statement, is the one that you will put into the cash book. So special names will be normally the answer. Normally will be the answer. Special names in the bank statement will be the answer for cash book normally. Okay. Now, when we perform bank reconciliation statement, it will be starting with balance as per cash book updated. Okay, this one over here, this updated amount. Now, we are about to add something called the unpresented checks. So there will be a check number. How many check number? And all. Okay, so now, if just now we take all the things that is in the bank statement, but it's not in the cash book, we're going to throw up, right? Now, once we perform bank reconciliation statement, it's as if we take things from the cash book and we throw down into the bank statement. For example, if let's say on the credit side of my cash book has something, but my bank statement doesn't have, so therefore I will throw to my bank statement. Okay, the credit side, I will go and debit my bank statement in a way to say, because I'm going to the debit side here. So you can say this add is something like to debit, but to debit my bank, meaning my bank statement, meaning to reduce my bank in the bank's perspective. Okay, and we also later on have, we minus off something called the deposits not yet credited, or check not yet deposit, uncredited lodgement, deposits not yet credited, uncredited deposit, something like that. Okay, so uncredited deposit means we already deposit our check that we receive from customer into the bank, but the bank is still undergoing clearance. They haven't credit into our bank account. So whatever is in the cash book, but my bank statement doesn't have, I'm gonna credit my bank statement now. It's like this less means what? Credit, right? So this is to credit my bank statement. For example, some sort of like we receive money, a sales, an amount, and we minus off. Okay, Then we get a bank statement. Okay, balance as per bank statement. Okay, so this one is something like we want to debit our bank in terms of we want to minus. Less here means we want to credit our bank in terms of we want to plus our bank account in the bank's perspective. Okay, now there's another new something sometimes you'll be seeing is bank error. Well, if human error can happen in the cash book, bank also might make some errors. So there will be over here another line here, bank error. Here means what? The bank has overstayed our bank account. They have increased our account, not purposely. So we want to bring it down, right? So we debit the bank statement. Bank error being they over increase our account. So you want to reduce. And if the bank error will be written over here as well, meaning it's the other way around, they undercharge our underpay us. Okay, meaning they not purposely give us a lower account. They lower down our account, not purposely. So we want to add back by crediting our bank over here. Okay, so that is our bank reconciliation part. So anything later on, we'll see much more during our class tuition, or later when I have the time, I will upload some contents about the exercise for bank reconciliation statement. Because now this video, all everything here that you will see is all the notes part, okay, and a brief explanation on this. So I shall see you all again next time. Remember to like, share, and comment on the video, and don't forget to click on the bell button to subscribe and to know more what's the latest. Okay, see you all next time. Bye.